Hello and welcome to this weekend's market update. Today is 4th of March 2023. So we're going to look at the major averages, gold, yield, just to see what the technical setup is, what are some of the levels we should be looking out for, so forth and so on. So let's start off with S&P 500. So this is the daily chart of S&P 500. You can see that over the last few weeks, S&P 500 has been consolidating. Since reaching a high of around 4,200, it's been moving lower. If I bring in the moving averages, you can see that it had fallen below the daily 20-50 moving average. And then on Thursday and Friday, rebounded very strongly after successfully testing the 200-day moving average right here. And Friday was a big day, was up 1.62%. And in the process, it managed to close above the daily 20 and 50 moving average. So from a moving average perspective, it currently is above all of the moving averages, which is positive. If you look at the horizontal levels, so I'll move the moving averages. So if we look at the horizontal levels, you can see that S&P 500 had traded between this level 4,200 and around 4,050, this zone, and then it broke to the downside. So if you take the distance and double it to the downside, you get to this level, and that's exactly where it found support. Also, if you draw a Fibonacci from here to here, the 61.8% retracement is this level. So this was an area that we talked about in last weekend's video, and that's exactly where it found support. Now, if we look at the the momentum indicators on a daily basis, you can see MACD was moving lower. It crossed below the zero line briefly, but then now it's beginning to kind of curl and turn. Is this doing something similar to what it did right here? And especially if it crosses and moves higher, that would be positive. So the momentum indicator MACD would have turned from negative to positive. If you look at RSI had fallen below the 50 level right here when S&P 500 was at 4079. But on Friday, it managed to reclaim that 50 level. So for a few weeks, the momentum had shifted to the downside, negative. And that's why we saw weak price action. But on Friday, it managed to reclaim. So on a daily basis, the technical picture is now looking better. The price is now above all the moving averages. The momentum indicators, RSI has moved back into positive territory. MACD hasn't done it, but it looks like it might be doing that. So so going forward basis, the question is whether S&P 500 is going to be able to reclaim this level. So this level, which was a previous support area, is going to be resistance. So that's around 4070, 4071 level. If this is able to reclaim this level, then it's going to be back inside this zone, because you can see that it spent quite a bit of time in this zone. So if it get back inside the zone, then at some point I would expect it to test the previous high, which is around 4200. So the daily technical picture, the momentum indicator picture, they look positive to me at the moment. If we look at the weekly pattern, just to see what the weekly pattern looks like, you can see that since forming this low, it has established a weekly higher low right here around 3100. The question is whether it is trying to establish another weekly higher low right here. Right. The only way, it will confirm whether this turns out to be a weekly higher low is if it's able to get back and close above this level 4200. If it closes above 4200, this would be then a weekly confirmed higher low in addition to this 3800. So the weekly pattern would then start to look much more constructive. If you look at the horizontal levels from a weekly perspective, so this pullback found support at the midpoint of the range from this 3800 to around 4200. It found support around the midpoint of this range. If you look at the weekly momentum indicators, you'll notice that RSI pulled back and found support at the 50 level. So this 50 level is important because you can see it was support right here, and then right here in the early part of 2022, RSI fell below the 50 level, and since then it spent much of 2022 below the 50 level, and we saw weak price action. So in early 2023, it has gone above the weekly 50 level. Since then, it has found support twice, once right here and then once right here, which is different from what we saw in all of 2022. So something looks different and positive about the RSI and momentum. You can see that MACD has moved above, and it has now crossed above the zero line. So that's also positive, because you will see that during the COVID sell-off, once the market recovered, MACD crossed above the zero line, and it remained above the zero line, during which time we saw positive price action. So RSI is now above 50, which is positive. MACD is now, so the weekly pattern looks more positive than negative to me. The daily pattern looks more positive than negative to me. So I would say that the bias would now be on the upside. Having said that, next week is very important because we're going to get some important economic report next Friday, and then next Friday is 10th of March, and then following week, 14th of March, we're going to get the CPI and the PPI for the month of February. So let's have a quick look at that for a second. So this is the calendar. So next Friday, 10th of March, non-farm payroll. This is very, very important. Last month, the economy added 517,000 jobs. The current consensus for month of February is 200,000. So the market is expecting the economy to add 200,000 jobs in the month of February, which would be significantly below the January level. In fact, after in January non-farm payroll report came out, SPY has been correcting. See, this correction started once that the January non-farm payroll came out right here. Since then, we had strong CPI report, and that led to this correction. So that's why it's very important, what these numbers come out next week. If the market, if the non-farm payroll comes out, stronger than expected again, that could put, market could react negatively. So let's have a look at the non-farm payroll quickly. So it's right here. You can see that on a monthly basis, the number of jobs. See, these are number of jobs that the economy is creating. There is the 517,000. The previous to that was 260,000. Now notice one thing. See, last month we had this big increase. The question market would want to understand is this kind of like a one-off kind of a thing, similar to what we saw right here in July of 2022, because prior to that you can see that the economy was adding around roughly 350,000 jobs, and then all of a sudden in 1 month the economy added 568,000. After that it went back to the more normal levels. So the question what the market would want to understand is this like a one-off kind of a thing, and then we head back to more normal levels, because prior to that the economy was adding roughly between 250 to 300,000 jobs. So the question is whether this was a one-off. So market is now expecting in February economy to add 200,000 jobs. If it comes in line with the market, then this might seem like a one-off. Something happened in the month of January. So I think it would be interesting to see whether that is the case. But I definitely would expect market to react, because this correction that we saw started when the last non-farm payroll came out on 2nd of February, which showed that the economy was adding 517,000. So it's important to see what that number is. Now, that's next Friday. And after that, on 14th March, we're going to get the CPI numbers. Market reacted negatively to last month's CPI report. Month over month, CPI rose sharply. So if we look ahead, you'll notice that, see, last month, the CPI rose 0.5% on a monthly basis. So the consensus, the market is expecting it to increase 0.4%. That would still be high, but we'll talk about that next week. But another component of labor report, the non-farm, is this unemployment, is this wage increase month over month. So the last month, wages rose at 0.3%. Market is expecting wages to increase at 0.3% also. If you look at the trend monthly, you'll notice that wages have been going up between 0.3% to 0.4% over the last 1 year, right? Now, 0.4 and 0.3 monthly increases are high, because if you take an average of around, say, 3.5%, 0.35%, sorry, if this is the average, 0.35% is closer to 4% rate. So wages have been rising at closer to 4%. What the Federal Reserve would like to see, wages rise no more than 0.2%. Now, we haven't had that over the last 1 year. You can see that it hasn't, because 0.2% increase on a monthly basis comes up to be around 2.42% annual rate. So that would be more closer to what the Federal Reserve is expecting. But right now, that's not what we're getting. We're getting an average of 0.35%, which is still well above what the Federal Reserve would be looking for. So we'll have to see what the wage increase has been in the month of February. So this report is going to play a key role, and that's going to decide what happens to S&P 500. If the reaction to the report is positive, then we can see further gains ahead. But if the reaction is negative, then some of the positive thing that has happened last week may start to change. But aside from that, the technical picture on a daily and weekly basis looks positive to me. Now, if we look at S&P SPY, just to see what some of the levels we should be paying out to, the first level is this one, which is around 405. So that's basically where this previous support zone was. And once it broke below this, it went all the way down here. So you want to see whether it can take out this 406 level. And if that level gets taken out, then the next level would be this, the early February high of around 418. So those would be the levels. Now, support definitely is right here, which is the low that we've seen this week, which is around 392. But if you look at the momentum indicators, RSI is moved back to about 50. MACD is curling and looks like it wants to cross and move higher. So the daily picture looks positive to me, and the weekly also looks positive. They would be in line with what we've seen in S&P 500. You can see RSI above the 50 level, and you see MACD crossing above the zero line. So weekly also looks constructive to me. Now, if you look at NASDAQ, just to see what's happening in NASDAQ. So NASDAQ daily. So first of all, let's look at the moving averages just to see where are we in relation to the moving averages. You can see last week it consolidated between the daily 20 and 50, found support at these moving averages, and then on Friday managed to close above, similar to S&P 500. So this is now looking positive. You can see that RSI, which had fallen below the 50 level for a couple of weeks, has now reclaimed that level. So this is positive. You can see MACD, which was moving lower, looks like beginning to turn near the zero line. So as long as it remains above the zero line, that would be positive, because you can see previously it had fallen below, but this time it hasn't. So if it can hold the zero line, that would be positive. If we look at the weekly pattern, so let's look at the horizontal levels. What are some of the levels we should be looking out for? Right here. So it has now reclaimed this level. So this was the previous support, which is around 12,200. It's reclaimed this level. So the next area would be this around 12,700 to 12,850. Those two levels would be the next level to look out for. And support obviously is this, the bottom of this range, which is around 11,800. If we look at the weekly chart of NASDAQ, so this is the weekly. So let's look at the weekly moving averages. You'll see that after this run up, it's been consolidating. It has now come and successfully testing this the daily 20 EMA. So it's now in a consolidation mode. If you look at the horizontal levels on a weekly basis, you can see that after this big run up, it has now pulled back to this level. This level is basically the halfway point between this low and this high. So as long as it stays and consolidates within the top half of this, I would say this consolidation is very constructive. If you look at the momentum indicators, RSI pulled back to 50 level, found support and bounced. Now this is different from what we saw here, where RSI was a resistance, RSI was a resistance. Here, even when RSI moved above the 50 level, but when it pulled back, there was no support and it fell right below the 50 level. So what we are seeing in 2023 is different from what we saw in all of 2022, because prior to that, you can see RSI was above the 50 level. So the question is whether or not it can hang on to it. But at least for now in 2023, RSI is above the 50 level. So this is positive. You see the MACD is moving higher. It hasn't crossed above the zero line yet. So we'll see whether or not it is able to make a complete move above the zero line. But overall, the weekly technicals, the price action, the momentum indicators, they all look more positive than negative to me. If we look at QQQ, so on a weekly basis, you can see it found support at the 50 level, which was a resistance in 2022. So this is looking good, and you can see that it found support around 287.50. Now the level to watch out is the 315 level. That's where there was a rejection. Whether or not it can, if it takes out the 315, that will confirm the bullish bias, and that will also establish this as being a higher weekly low. So after forming this low, if it's able to close above 315, then this will be a confirmed higher weekly low. But if it breaks below this level, then obviously, the technical picture will start to look more bearish, because I would then expect RSI to fall below the 50 level. So keep an eye on what happens to the price action around 287 and what happens to weekly RSI. On a daily basis, the QQQ levels to watch out for is, so having taken out this resistance right here, the next key resistance is this level right here, which is around 308, 309 level. And beyond that, it would be around 315, which is basically the previous high. And support obviously is this low, which is around 288.50. You can see on a daily basis, RSI has moved above the 50 level. MACD is beginning to curl. So the technical picture also looks positive here. So that's S&P 500 and that's QQQ. Let's look at what's happening in the yields market. So if you look at the 10-year bond yield, so the 10-year bond yield, it's been just going up. It's continuing to move higher. It has now taken out this previous high, which is around 390. Now it was about 4%. On Friday, there was a reversal. It was down 11 basis point. It was down 2.61% on Friday. Now, basically what happened is one of the Fed president basically suggested that Federal Reserve might be pausing sometimes in late summer. And he also suggested that the pause might be somewhere between 525 and 550. Now, market certainly is expecting 550 because if I look at some of the yields, so this is the September Fed funds future. So this closed at 5.45, which means the market is expecting Federal Reserve to increase interest rate up to 5.5% by September. If I look at October, it's also around 550. So the market definitely is expecting, but the 10-year basically reacted, thinking that perhaps we've already reached the top end of the range. So that's when the yield pulled back. Also, the yield had gone up quite a bit in recent, so I'm not surprised if there was basically a bit of a pullback, and that pullback provided support to the stocks. It also meant that dollar pulled back. Dollar fell slightly. This is dollar on a daily basis. You can see that it's been consolidating in this range right now. You can see RSI has been gradually moving lower, but it's still above the 50 level. So as long as it's above 50 level, then the momentum is still positive. You can see that it spent a long time below the 50 level, say from this point to this point, and ever since it has gone above the 50 level, we've seen positive price action. So we'll have to see whether or not this is able to hold. Now, if you look at the weekly basis, so where is dollar? This is DXY on a weekly basis. So on a weekly time frame, it has recovered. It was way oversold. You can see RSI fell and was way oversold. And all RSI has done is it's come back to a more normal level. See, this area is basically the key level. So you can see that it's having some difficulty at this level. You can see that ever since dollar was able to get above this level in 2021, it stayed above this level until it fell below this year, and that's when the weekly momentum turned negative from positive. So as long as it remains below this RSI 50 level, the momentum on a weekly basis will still remain negative. So we'll have to see whether or not it's able to get back. On a daily basis, it is above 50. So the question is whether it can hang in there and on a weekly basis it's able to get back above it, or whether this will remain negative and the daily eventually falls back below the 50 level. So we don't know how things are going to play out, but I can definitely see on a weekly basis it hasn't yet turned positive. So that's something to keep an eye on. And from a level to watch, this is a weekly important level, which is around 105.70. You can see there was a rejection right here. You can see there was support right here. So this is also an important level from a weekly basis. Now, if you look at the weekly moving averages, you can see that they're acting as a bit of a resistance right now. So it hasn't made a clear breakthrough to the upside. I think they're all coinciding with, the moving averages are, experiencing some resistance. RSI is experiencing resistance. So we'll have to see how, going forward, DXY resolves this issue on a weekly basis. So the weekly basis, it's now come back to the neutral level. Let's put it this way. It was oversold. It was bearish. Now it has moved to a more neutral level. So we now have to see what's the direction of what's the direction going forward. Is that gonna continue to remain below the 50 level, like right here? Once it fell below the 50 level, it stayed below the 50 level for an extended period of time. So we'll find out. Maybe the economic reports that come out, the non-farm payroll next Friday and the CPI the following week will provide some clarity which way DXY moves. But at the moment, I would say it's neutral at best on a weekly basis. It's still positive, but momentum is gradually moving lower on DXY. Now let's have a look at gold. So what do we see on a weekly basis? On a weekly basis, you can see that big run up and then pull back to the moving averages. You can see these moving averages acted as support this week. You can also see RSI. RSI had reached an overbought level right here, and then all it has done over the last few weeks is come back to a more neutral level, and it at least found support this week at this level, and you can see there was a bounce. You can see RSI 50 was a resistance here, 50 resistance right here. So it's basically doing opposite to what DXI was doing. You see DXY from an oversold level came to the neutral position where it experienced resistance, and gold from an overbought level has come back to a more neutral level where it found support. So going forward, the economic reports will tell us which way these two markets will move. Will gold continue to move higher, or will there be a shift in gold? RSI falls back below the 50 level, similar to what happened in 2022, and the opposite. Well, we'll have to wait and see. But but you can see that the gold is finding support in this level. What about oil? Now, something interesting is happening in oil. I think it's worth keeping an eye on. So let's have a look at oil on a daily basis. So this is oil on a daily basis. Now you can see that oil has been trading basically going nowhere for the last many weeks, but it's beginning to show some some strength. You can see on a daily basis RSI has moved above the 50 level. It hasn't done so for a while. You can see MACD is beginning to move higher, and it has now crossed above this midpoint of this range, so from here to here. So this is now looking interesting. If you look at on a weekly basis, things haven't okay. So if you look at the weekly basis, you can see that it's been let me just zoom out. You can see that it's been chopping in this range between let's see 82.50 and 72. It's been spending a lot of time in this. If it's able to clear this zone 82.50, then it has a good chance of moving up towards this level. Now the other thing is, if you look at the RSI has been kind of consolidating and gradually moving higher. It's not too far from the 50 level. You can see the RSI 50 level acted as resistance right here. The question is whether it's going to be able to get back above this level. If that were to happen, at least on a weekly time frame, I think the momentum will shift from negative to positive. So I think we may have a trade here, looking at the price action with looking at the momentum indicators. There could be a nice little trade in oil. So this is something to keep an eye on. I mean, we don't yet have a buy signal, but it looks like it's coiling just below this important resistance. You can see a couple of rejections. If it's able to get back above the RSI 50 level on a weekly basis, we might be onto something, because on a daily basis you can see that momentum has shifted positive. You see this big candle on Friday, so looks like something is brewing. So keep an eye on oil. If we look at VIX, so VIX, what can you say? It's been just pulling back. It's looking negative. You can see that it has fallen below the RSI 50 level. It's now come back to previous demand zone. The question is it going to bounce from here? But overall, it looks negative to me at the moment. What about Bitcoin? Bitcoin had a big fall. So you can see that. So these are the levels. You can see that this level, which was a previous support zone, it breached that level. You can see RSI has fallen below the the 50 level, and MACD is moving lower. So momentum indicators have shifted negative on a daily time frame, but on a weekly time frame it's still fine. So if I look at here's the weekly basis, you can see RSI is still above the 50 level, but you know, we need to watch, you know, keep an eye on it, because you know it can easily dip back below the 50 level. It's still holding that. As long as it holds above the 50 level, you know, things should be fine. But you know, at least on a daily basis, I'm seeing some weakness. The question is whether this weakness is gonna carry over to the weekly time frame. At the moment, weekly hasn't turned negative, at least the momentum. But you know, I'm keeping an eye on it. But the daily certainly has. You know, RSI is you know, below the 50, you know, and MACD is moving lower. It hasn't crossed below the zero line. If it does, then that would you know, that would be negative. If we look at some of the other indicators, so let's look at other indicators very quickly. This is XLK. This is the largest technology sector in S&P 500. RSI above 50. After rising to this level, you see some consolidation. Maybe it's trying to form a weekly higher low. So this is looking, and you can see MACD is moving, crossing above the zero line. So this is looking more positive than negative to me. And if we see further gain, this should put upward pressure in S&P 500. This is the largest sector in S&P 500. This is XLY. This is a growth sector in S&P 500. You can see that over the last few weeks, consolidation. Is it trying to put a weekly higher low? You can see RSI at a neutral level. MACD is moving up. It's not as strong. So, you know, overall, I would say this is more positive than negative. This is XLF Financial. They've been also you know, consolidating, but momentum still remains positive. RSI above 50, MACD above the zero line. So, you know, question is this trying to form another weekly higher low? You see low, this is higher low. So once it gets back above this area, so financial look fine to me. Healthcare, this is where I see the weakness. This is the number 2 sector. This is the second largest sector. This is where I see weakness, because you can see on a weekly time frame, RSI has fallen below the 50 level. You can see MACD is crossed, and then you know, heading towards the zero line. If it crosses below the zero line, that would be negative. So this is the second largest. So if this continues to move lower, that's going to put downward pressure on S&P 500. So it's worth keeping an eye on this one. XLC, growth sector in S&P 500, strong run up, pullback, consolidation. Is it trying to put a weekly higher low? You can see RSI came back and tested the 50 level. You can see that, you know, having spent you know, good portion of the time below the 50 level, for the first time in 2023, we see it go you know, go above the 50 level, and at least so far a successful retest. You can see MACD moving higher, heading towards the zero line. Looks more positive than negative to me. XLB, building materials. You know, after this correction, it looks like it wants to go higher. You can see our RSI is, you know, found support at the 50 level. You know, it's moving higher. MACD, so that looks more positive than negative to me. That would be bullish for S&P 500. This is industrials. You know, RSI above 50, MACD, momentum indicators are all positive. So further move to the upside means upward pressure in S&P 500. This is utilities. This is a defensive sector. So, you know, it's looking weak to me. You know, what I'm noticing is that over the last number of weeks, investors have shied away from defensive sectors, which have done well in 2022, but they're underperforming. This is XLP, another defensive sector. You can see that you know, since towards the end of last year, it's been basically It hasn't been falling, just basically going sideways with a slight downward bias. So this is again showing risk off. RSI is at a neutral area. Energy looks fine to me because you can see that it's holding the RSI 50 level while it consolidates. So I think this looks fine. If RSI fell below the 50 and remained 50, that would be negative, but not, but that hasn't happened yet. This is XLRE, real estate. You can see that it's been consolidating. RSI is slightly negative, but if it can reclaim this 50 level, then I could see, then we should see some positive price action. This is semiconductor sector. So, again, you see few weeks of consolidation. Maybe it's trying to put a higher, weekly lower high. You can see low, higher low. Maybe this is another higher low. That will be confirmed once they're able to get through this level. You can see momentum indicators are positive. So this is looking more positive than negative to me. Biotech kind of going sideways, stuck in this range for a while. RSI at the midpoint. So not seeing huge amount of bullishness, but not seeing bearishness either. It's just going kind of sideways. It hasn't done much for a very long time. So we'll have to wait and see whether or not that changes. This is solar. Solar has been kind of going sideways. I mean, it hasn't done anything. Hasn't made a big move to the upside or to the downside. Kind of in a neutral zone. And if we look at some of the other ratios, so this is XLP versus S&P 500. So this is just to see if there is any defensive posturing. There was a couple of weeks of uptick and then fell back. I'm not seeing any shift away from defensive to growth. From growth to I'm not seeing a shift back into the defensive sector. You can see that XLP continues to underperform S&P 500. You can see that this ratio has now, the momentum is negative. If you look at utilities versus S&P 500, I can see that utilities are also underperforming. You can see during the 2002 bear market, utilities were underperforming. Now I see just the opposite. So this is again indication of risk off. If you look at dollar versus S&P 500, again you can see that it hasn't made any significant move to the upside. This dollar was outperforming S&P 500 good portion of 2002, but it has started to underperform. You can see momentum indicators are. So I'm not seeing a big shift back into defensive posturing despite yields going moving higher, despite high inflation. I'm not seeing a shift into a more defensive posturing. I'm not seeing that yet. I'll leave it at that. We've covered a lot, but next week, as I said, key reports coming out, and that will provide more clarity which way the market goes. So I'll leave it at that. Thank you very much for watching the video. If you like the content, please consider subscribing, sharing, and I hope to see you again in a future video. Thank you very much.